Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer, and we'll be taking a look at Albemarle stock today. This will be a little bit of a break from the past videos that I've made the past few weeks or the past month, where I've been taking requests. I recently bought this stock yesterday or the day before. It was actually yesterday. And the price has bounced a lot. It's bounced like 10% since then, just in the last 24 or 48 hours. But I want to share kind of my process here, my history with this particular stock, and the price that I bought at, that I think if it falls back down there again would be a good opportunity for people to buy. This one is in the S&P 500, so I'm just going to put this stock out there for free. But to get these really kind of timely purchases, if this does end up being the bottom, that's probably not like necessarily my expectation. I'm not really trying to pick the bottom. I'm just trying to pick like a good price. Then this is one of the benefits of like joining the full Cyclical Investors Club service, because you know, we could see this coming and have like limit orders in, and then if it does end up being like the bottom, we were able to get it in a timely manner and get it a little bit cheaper than get it at all, basically, but get it cheaper than anybody else, basically. This does happen on occasion with these deep cyclical stocks, where we do end up kind of getting a bottom. Now there'll be other ones where we miss the bottom, even though I'm not trying to get the bottom. But if you kind of take the average overall, as long as you can get enough of them kind of close down there, or at least at good prices that will produce good returns, that's the ultimate goal. So the first thing I'll get into here, and this is not investment advice, I'm just literally sharing with you how I do this and why I bought it and kind of what I expect to happen over the long term, medium to long term. So the first thing I like to check is the earnings cyclicality, right? So that's the dark green shaded area here. These guys are lithium producers, lithium miners, and their earnings go through. So this I would call like moderate cyclicality, but the price fluctuates a lot more than the actual earnings do. Let's see if we can get another time frame here. So they had a larger down cycle here, right? So this is kind of long-term moderate weakness, and then a sharp decline during COVID, but still kind of moderate levels. So you could try to do a normal earnings analysis, but you can see the super cycle that they're in right now makes it kind of difficult. I'm not sure what basic earnings look like. They might be a little more cyclical because they might try to bounce. Yeah, so this is a little more telling here. Where you get this like 28% down, nearly 50% down. And again, we have another big one here that's like 90% down. Again, this is 80% earnings fluctuate. And you can see it does kind of coincide with the stock price. The stock price sort of anticipates these downturns. And some of this could be like M&A. Sometimes adjusted earnings are adjusted for a reason, and sometimes they're adjusted just to smooth things out so investors don't freak out. But I would classify this as a cyclical stock, just because lithium prices are cyclical. And I don't have a chart here of them, but if you looked at them, you would see that they can go up and down a lot, and that will cause a lithium miner's earnings to go up and down a lot, and that will cause the stock price to go up and down a lot. So we have this kind of basic cyclicality here. And so when that happens, what I like to focus on is the historical stock price, as long as it's high quality enough. And so what I like to look for is, are these earnings peaks? Let's get rid of this recent one. Is each earnings cycle higher than the other one, or at least equal to? So this one's probably like $3, $2.50 or $2.40, and then the next one's almost double that at $4.70, right, or $4.85. And then they have this down period, and then the next one's like $6. Okay, so that's the sign that you want to look for when you're trying to buy a deeply cyclical business, you want to see this is kind of an overall secular growth trend. I mean, if you think about like electric cars and storage and batteries and all that, I mean, it's sort of common sense, but it can depend on each business. You want to see if the business is actually improving over time. And so each earnings cycle is higher. And then we get the super cycle here that we've had now where it really spikes up, which is even higher. But that lets me know, look, this is high quality enough. It has a history of coming back. It's probably going to come back. And if I can just buy it at a cheap enough price and wait, it'll probably come back again because, when lithium prices go down, miners invest less, they produce less lithium. And if there's overall secular growth underneath that, eventually the lithium prices rise and then they make more money and then invest. So that's just how it works, right? And these are the type of things you want to buy into with a cyclical stock. Now, that doesn't mean that the price is going to not fall a lot, as investors over here are learning right now. So this stock is about 65% off its high, I think. Almost. So the folks that have bought any time, since 2021 are now underwater. Now, I have invested in Albemarle before, and I have some data on that. So back in the Cyclical Investors Club, we bought it in 2019 in February, and then the price fell a lot, and so I bought it one more time. It's pretty rare for me to double down on stocks, but sometimes with high quality deep cyclicals, they can fall a lot more. You can buy them down 60% and then they can fall another 50% sometimes. If I have a lot of conviction, I'll come in one more time. And that's what I did with Albemarle. And then COVID hit and then it fell even lower than this after I bought it. And so you really have to have like a commitment to hang on until it recovers. And so that's why I like to buy these when they're really cheap. I don't like to buy them until I feel like I can hold them 5 years and still do well if it takes 5 years to recover. Because these are like real economic processes and they can take a long time. If you get a recession in there, it can push everything out farther. So we did really well in 2 years or less. This averaged around 100% return between the two of them. If you go back, and so we sold February 4th, 2021, which is right in here, right? So we sold there and took profits. We bought here-ish and then down here again. And it kept falling like another probably 30% at least, I would say. Maybe more than that. And then I took profits right here, and then it had this big super cycle, right? So it's not about like timing the top or even timing the bottom. It's just about, with cyclicals, getting the return goals that you want. So I think I put a trailing stop on at one point once it got above my goal, basically, for the stock, which was about 100% return. And who's going to complain about 100% return in less than 2 years, right? I mean, so probably like a 50% CAGR or something. And then, but the stock kept going higher, and then you just wait, and then if you wait long enough, the cycle comes down, and so we avoided losing a lot of those gains. And you're able to invest in other things too when you take profits. So when you know something's cyclical, you know it's going to go up, but you also know it's going to go back down. So I usually know where I'm going to sell roughly when I buy one of these. And I just kind of reverse the thinking. So you're not thinking so much about where's the bottom going to be. You're thinking about, will it recover in a timely manner somewhere up where it used to trade? And that's kind of the thinking that you have to have behind it. And then when it reaches that, you can't get greedy. You can't get too greedy. Now, if it would have kept going up here and it wouldn't have had this dip, I mean, I put a trailing stop on this one, so I don't always do that, but I was like, if the market's going to really go crazy, I'll capture as much as I can, but I'm definitely going to protect my downside at this point. And so if it wouldn't have taken this dip here, I mean, I might have got lucky and been able to get out up here, but that's just luck. I just think that's like bonus money if I could get it. But usually I'm always pretty happy a couple years later, or sometimes less. I mean, sometimes you nail the top, and you miss the big downturn. So, but the key for investors here is, so we bought this in the Cyclical Investors Club yesterday for 117. That was pretty much the bottom. I don't know if it's going to be on. Yeah, 116.35, and I think we were at 117.09 is where we came in with a limit order. So, and it's up like 10% since then. Now, my expectation is this keeps falling, and this is what I was telling everybody. So, much like last time where I bought twice, so what's happening here is what I would call a super cycle, which you have to be really careful about when you're kind of buying these stocks. So, my method for buying them is to look how far they've fallen off their peaks. Once I know their quality, go back and look at other recessions. In 2008, it fell about 67%. In 2020, it fell about 66%. So, I mean, I knew this was kind of a super cycle, but 2008 was a bad recession, and 2020 was a big down cycle for lithium. From 2018, this actually started in 2018, went all the way down and didn't bottom until 2020. So, and I had owned the stock during that time, so I was familiar with it. So for me, I thought, look, if you come in when it's down 65% off its highs, which was right here, if that recovers, you're going to get a 200% return, basically, right? So, and that worked out to 117.09. And then basically what you do is you buy these, and this is a 1% weighted portfolio weighted position. These are small positions. Now it will be 2% if I buy more if it keeps falling, but because these stocks can move a lot, they can be unpredictable. Usually there's reasons why there's structural cyclicality to their businesses, so there's more business risk if something bad happens. So I like to just take 1% to 2% positions. I wouldn't take more than 2%, we'll put it that way, because this could fall 50% more. Okay, and you don't want to be scared. You have to be confident and willing to hold. And some of these are not going to recover. And I don't know which ones they are before I buy them, or else I try to avoid the bad ones, but every now and then, like once every 5 years or something, I'll still have one that just doesn't come back, basically, that ultimately goes bankrupt. So, and I find if I took a 2% position last time, that doubled to a 4%, basically. I mean, that's significant earnings to a portfolio, and I cover a lot of stocks. So if I can get enough of those, it does add up. But they are volatile. You cannot be scared at all. You have to accept they might not make it, but you're going to buy them anyway, or they might go lower and you're going to buy them anyway. So I kind of basically told everybody this is probably going lower, and then it bounced, of course. But you want to buy some here. And then what I would do is, because this is a super cycle and we're measuring off the top, it gets really dangerous to try to buy on the way down, which is what we're doing right now. Because maybe this is a one-time thing and they go back to like this type of pricing, right? And that was a peak, kind of. And so what are they? That's a lot lower than $17.60 per share, right? And the market's pricing a lot of that in. They don't really expect them to earn this, I don't think. I mean, otherwise the stock price wouldn't be where it's at. So this is going to be a lot lower. Maybe back down to normal. We don't know. It does have secular growth, so it might bottom somewhere in here, and that's kind of why I'm buying now. Because it's going to be hard to pin an actual bottom here. But if it takes 5 years to recover the old highs, that's like even if it took 10 years to recover the highs, you're getting a 200% return over 10 years, which I don't know. It's probably like low teens CAGR, which in this environment is probably pretty good. So eventually at some point probably lithium comes back. And then if they do take another dive down here, what I usually do is look for some kind of like technical bottom at that point. I want to see momentum shifting. I want to see the stock price forming a bottom, a double bottom, crossing the 200-day moving average, something like that, where it looks like, okay, the price is really low. So right here it bounced, but the price wasn't actually low yet. So you want the price to be low. Put it. Maybe we can see one probably around 2020. I don't know if this is the case. I'm just gonna look, see if we can see it on the chart here. So something like this, bottom, breakout, and then if it wasn't good there, then it certainly was good here, and you still had probably a 100% return left. So, well, you had more than that, but a 100% return until it recovered the old high, and then it kept going. But so you can, if you get that second position down there, which is exactly kind of what I did last time, and even if you get the first one a little too early, you can get that cost basis down. So I would say, if I just eyeball this, I would say $50 to $60 per share is probably where I'd be. Okay, maybe it's time to add a second position, and then you figure you're in at like $85 a share for your average. All right, and so then you get a double even if it just gets back to 150, which is where it was before the super cycle, right? I think I sold it at about 150. So you kind of think of it like that. Okay, this is a super cycle. Maybe I get in at like 70, let's say 80 would be what? 170, That would be this peak right here. If it just recovered, it wouldn't have to recover all the way up to this $300 level for you to get 100% return, right? So, but if it doesn't fall that far, you have at least a small position that could triple, basically. And so that's kind of how I like to play it. I don't know what's going to happen, but one thing I would say is if you buy at 117 and it loses half its value, you don't want to sell, unless something really crazy happens, like fraud, like that kind of stuff. Okay, so there you have my my run through. Now there are other factors I check for like quality and things, but I've owned this one before. I'm not going to run through all those. Usually debt is the changes in debt structure. That's usually what I'm looking at. Just really what you're asking yourself is what's different this time than past cycles. The main thing that's different this time has more to do with this super cycle here than it does, I think, with the business, which is kind of the same as what it was. Okay, hit the subscribe button if you found this useful. Hopefully it works out and it's a good strategy for you to consider. These type of stocks are kind of my specialty, so I feel pretty comfortable, but they do take some getting used to and understanding. And I think small positions are a really important part of that. And then once you've had some success and once you've had one fall 50% on you and then come back and make 100%, then you're like, okay, this is like why people don't try to do this, one, and two, why if you learn how to do it, you can actually get some alpha and get some better returns than most people. If you like this, hit the like button and hit subscribe, and I'll see everybody later.